moderate this session. We have some eminent panelists on the dais with me. So I'm requesting each of the panelists to give a brief intro in 2 to 3 lines so that everyone is aware.
Hi everyone, good afternoon. So my name is Vaibhav Pandey. I am co-founder of I2I Funding. We are a peer-to-peer lending platform or a P2P NBFC. Started our journey in 2016 based out of Noida. Mainly lending to blue-collar professionals across India.
Yeah, hi. My name is Karun. I represent Faircent. Faircent is again like I2I, a P2P lending platform, although we started in 2013. And we basically have a license from RBI to do peer-to-peer lending, which is largely unsecured loans going out to all, basically to salaried or self-employed users.
Sure. Over to you.
Hi everyone, good afternoon. My name is Kaushik Banerjee. I'm the Chief Credit Officer for Ugrow Capital, which is a rated and listed NBFC. Today we have around 6,500 crore book and we are very high on co-lending.
Hello everyone, good afternoon. I'm Avinash Jha. First of all, I'd like to thank Elets for having us over here. I head sales and strategy with Knight Fintech. Knight Fintech is around 4-year-old organization, and we are pioneer into co-lending middleware, and that is what we wanted to discuss. Thank you so much.
Great. Let me start with Kaushik Banerjee, who is the Chief Credit Officer of Ugrow Capital. Kaushik, if you can talk about some of the technological challenges which this co-lending model brings up, and what are the solutions your organization is using?
Right, thanks. So like Mr. Gigi said, that UPI has been a game changer for India. Globally, we are being acknowledged. My personal understanding is that innovation in the banking sector, the two last bigger innovations that I remember, first was the ATM and second was probably UPI, which has changed the entire dynamics of the lending business. Third, I think what is coming up is co-lending. We aspire and everyone wants co-lending activity to reach to that kind of a scale and acknowledgement like an UPI innovation or an ATM innovation. Now, while financial inclusion has been the aspiration of Government of India, RBI, large PSU banks also, I think somewhere it is lying in a bed. While I say bed, it means bias, error, and delay. That entire decision-making process itself takes a lot of time. Now, large PSU banks and private banks both have a lot of other roles to play in managing the economy, foreign currency, forex. I think this activity of reaching out to the needy people is where small NBFCs or fintechs like us can really fare and do it successfully. So that's where technology comes in, when we have to remove all these three aspects, bias, error, and delay. That can happen only through technology. I think RBI has to allow account aggregators who are sharing the GST data, who are sharing the banking data. Today, there are 2-3 portals available. Tomorrow, I'm sure there will be larger number of people. So once the real-time data comes in, the decision making happens in 2-3 minutes. So today, we as an organization do not take any financials. We are lending up to 3 crore without financials. We are just taking your GST data and bank statement and bureau data. Our entire credit appraisal is based on these 3 pillars. And I think most of the banks are also trying. Some have succeeded to some extent. Some are yet to reach to a particular visibility, I would say. But yes, everybody is trying. We have done extremely well in the last 1.5 years, and we have reached to 6,500 crore of lending, out of which around 2,000 to 3,000 crore has been co-lended or co-originated with larger banks and NBFCs. So yes, technology plays a lot of, technology gives you that kind of an edge to take faster decisions without having too much, without asking for too much of a data to reach out to the needy person. And that's how it is. That's the way it is.
Fantastic. Let me request our panelist Vaibhav, to your views on this usage of technology in the co-lending sector.
Right. So one is, I mean, technology overall playing a very important role in the lending landscape, and that's why sir was talking about how it has helped in bringing or in making the decision-making process faster, making sure that decisions are taken immediately and customer does not have to wait for his approval or sanctions, right? So obviously there is one role where it is enhancing the overall lending landscape. The second is specific to, if we talk about co-lending, right? So there are certain intricacies involved in managing this entire process, because till now, one bank or one NBFC was owning the customer. It was entire solution was being managed, entire application, onboarding journey, repayment was being managed in one single application. But now we are talking about one single loan being funded by probably, and right now we are talking about two co-lending partners. I mean, it gives you flexibility of doing probably 10 co-lending partners funding a single loan. So are you technologically capable of managing one single loan in 10 different LMSs? Maybe managing 10 different rates, 10 different hurdle rates, different kind of risk sharing arrangement. So whether your technology solution can handle all of that is going to give you, is first going to determine whether you can participate in such kind of solution or not. To give you some example, right? Suppose there is one partner who is funding 20%, and we are talking about CLM1 kind of model where we are doing co-origination. So now, instead of one partner taking a decision, both NBFCs or one bank and one NBFC is taking the decision on a real-time basis. There can be some agreement on credit criteria, but both of them are doing this decision making independently on a real-time basis, getting the decision conveyed, getting the joint loan agreement signed. Bank may have a different rate, NBFC may have some other rate, and overall rates or a blended rate which is being passed on to the customer would be something different. So you're practically managing 3 different ledgers for the same loan. You may have different kind of risk sharing arrangement where your bank may be asking, or a major NBFC might be asking for a hurdle rate. And when the repayment starts coming, you actually start managing those hurdle rates as well. So if you've received 100 rupees, whether the first 80 on a loan level or at a portfolio level goes to the first partner and then remaining goes to the second partner. So you can't do all of that manually, right? So you need to have real-time efficient systems which are also transparent. So when you are basically talking about an association where people are taking risk, transparency is the key. So all that data has to be transparently available to both the partners to make sure that the entire model scales up.
Thanks, Vaibhav. Let me request Karun Thareja, who is the Chief Marketing and Product Officer, Faircent, about your views.
Yeah. So, there's this old saying that necessity is the mother of invention, right? So if there is a need, solution will come up. Having said that, like Vaibhav was saying, and I think I'd just like to point out that we are as Faircent, a peer-to-peer lending platform. So, the idea is kind of birthed in co-lending, right? So instead of like two partners or two entities getting together to lend money, we literally have thousands of lenders lending to one borrower, right? And we've already automated that. That is an industry which has been there for the last almost 2 decades worldwide. So I think the technology exists. Here we're just talking like, instead of surfacing the information of a particular borrower on a screen, we're talking about integration with another NBFC system or another bank system to allow for that to happen. Like Vaibhav was saying, hurdle rates and all. So we've visited these problems when we were doing peer-to-peer lending. So if a borrower pays and there are 100 lenders who have lent that money, how do we distribute it across the lenders? and ensure that it's all fair. Having said that, I think I really liked Kaushik, what Kaushik was saying, that about like bed, like bias, error, and delay. And I think technology fundamentally can play a very important role in these three areas to remove bias. So like the more the manual or the human judgment which is coming in, that introduces bias, right? So the more we have technology playing a role there, we can reduce that. There is a lot of work, which has happened around how do we detect errors of or forged documents or things like that, and like technology has advanced a great deal. Fundamentally, if you have two partners or NBFC bank, etc., coming in, so you're actually making the whole application go through two systems. So therefore, there will be like a reduction in error because of that. And lastly, delay. And because fundamentally, like when you talk about technology, the main thing which you're looking at is automation. And automation fundamentally helps you to reduce the time taken. So I think technology has a very important role to play in co-lending. And I think, as we see uh, 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 as we see more players wanting to do co-lending, we will see solutions evolve. It's not that they haven't been there, but they will evolve further. And fundamentally, the reason is that we are seeing a lot of interest in co-lending because of two players wanting to get together and better utilize, the supply of funds which they have. I think that's at the core. So we're going to see more of that going forward, as we go, and like the way the economy is and the global economy is. So I think there is a lot of need for this. So we'll see great progress in this area.
Fantastic. Great inputs. Let me turn to Avinash Jha, who is Senior Vice President at Knight Fintech. Uh, um, you are already into like technology solutions for this co-lending space. So how are you seeing these challenges of the NBFC or banks in this co-lending sector, and how can technology help this?
Sure, Dr. Gupta. Thank you for this question. So yes, we all know that co-lending concept itself is very, very new, and it is in the evolving stage, infancy. And there are plenty of challenges that we have seen in co-lending. Uh, but fortunately, we from Knight Fintech, we got fortunate enough to actually cater to. Today, we are catering around 40% of digital co-lending, whatever is happening on our platform. We are supporting around 1 lakh of monthly transactions on our platform, which is valuing to around 300 crore of disbursement. So what I can summarize, what are the challenges and what technology and platform can bring in. So I can categorize the challenges under 4 different categories. One would be the bank and NBFC wants to get integrated with each other. So one bank is looking for more than 10, 15 NBFCs or probably more than 25 NBFCs to be onboarded on one banking system, which is totally is difficult task. Same goes with the NBFCs. One NBFC will not be working with only one bank. They would like to work with more than 5, 7 banks. And these banks' expectations would be totally different, even though this NBFC is catering to only one loan product. So let's say a home loan NBFC, but then the rate of interest, the policies with each bank would be totally different. So that is a chaotic thing that, integrating with these banks and these partners, that is one set of problem. But mind you, this, according to us, our understanding and maturity, what we are seeing, that this is only 10% of the problem statement that comes under co-lending, because this can be achieved after a hard work of, let's say, 6 months of time. But the later on the problem comes is regarding the accounting and reconciliation. I think we all are bankers sitting over here. You will agree with me, especially the ops team, that day-to-day issues comes under the operational challenges. Sir has already explained about it, that how, those hurdle rate examples and then appropriation examples, or probably, the accounting logics are different at bank and at the NBFC end. So accounting and reconciliation, according to our understanding, is the heart of the problem statement, and that is the reason most of these co-lending relationships are facing those issues. Moving forward, escrow management. The third point that I like to discuss is the escrow management. That is also a difficult thing, because you have to split the money, and let's consider about CLM2, whereby the loan is already been disbursed, let's say 2 months back, and now you are pushing that lead to the bank, and bank has taken that lead onto their books. Now you have to port from the originator's account to the collection escrow. So escrow management is very difficult. That is also one of the major problem that we can see. And the fourth problem statement that we have come across is CLM1, that is co-origination, whereby bank and NBFC underwrite the loan simultaneously, let's say. So NBFC has not disbursed it, waiting for the bank's approval, and then bank will approve, and then they will disburse the loan. But meanwhile, this borrower is waiting. So bank will have to really, come to the level whereby if NBFC has done the underwriting in 2 days of time, this borrower is waiting, and if bank is taking, let's say, 10 days of time, or probably, more time, then probably there is a loss to the entire ecosystem. So, underwriting at the pace of what NBFCs are doing, that is the fourth problem statement that I can see. And we at Knight Fintech, we have come up with the solution whereby we are able to cater to all these problem statement, and we are able to solve this. So, thank you.
Excellent inputs, Abhishek. Let me ask our panelists since this model of like lending together or joint lending or co-lending has like unique regulatory challenges, you have to be compliant with the laws of the land. So what are the unique regulatory challenges this type of lending provides, and what is the ways like one can address the compliance issue? Let me request Vaibhav to start the discussion.
So when we talk about regulation, I think it starts with challenges. So as soon as you try a new model, I mean, obviously there would be certain regulatory aspects that you need to take care of, whether it is bureau reporting. If you're talking about a co-origination kind of model, same loan is being reported by two partners based on their shares, their interest rates, making sure that even if, I mean, just to take an example, even if your hurdle rate is matched, I mean, if your partner is able to match your hurdle rate and you have received your payment, but you can't report the borrower that borrower has paid on time. So even if you have received the money in your books, you need to still report that loan is under delay. So managing those kind of things in your system, when you're doing regulatory reporting, even to RBI and other such reports, right? So you have to make sure that those aspects of fund flow, I mean, managing funds is separate and managing customer account separately, and making sure that both of you report the same loan account in sync. What is the actual payment scenario is one of those aspects.
Sure. Your views, Karun? Yeah.
Yeah, I think mostly, what we see from a regulation perspective is that kind of it follows the market. So I'm sure, as we go along, we will get, the right regulations in place. So, for example, when, we started P2P, both I2I and us, there was no regulation, but eventually it came. But I think, so the regulation will also come through. I think RBI has still said that, you can do co-lending out of an escrow, and it needs to be an escrow arrangement. Prior to that, co-lending was being done. It was not being called co-lending, but it was being done. It was being done as like two loans separately, one loan going to the other. But from a regulatory perspective now, with the new digital lending guidelines, there is a certain way in which you have to do things, and it is a challenge, right, to conform to that certain way of doing things for with respect to this model. Like if you have to do a key fact sheet for the customer, what how do you do that? If you have to like Vaibhav was saying, report to the bureaus, how do you do that? Per se, like all NBFCs have to report to RBI on a regular basis. How is there any change on that front? But I'm sure, like as we go along, clarity will come, because this is kind of here to stay.
Uh, requesting Kaushik Banerjee to give your inputs on this.
So I see it, I split the entire governance requirement into two parts. One, on the customer side, and second, on the co-lending arrangement, right? If we being a full-fledged NBFC, if I look at the governance or regulations on the customer side, it remains absolutely the same, which applies to a bank or an NBFC. So bureau reporting, DPD calculation, everything is absolutely the same. On the co-lending arrangement side, some new governances have come up, like you cannot charge more than X, more than Y percentage, or who needs to collect the account. What happens if the account goes into default? Let's say I have an arrangement with any other large NBFC wherein the share is like 80-20. Okay, now loan goes bad, 80% is with the other co-lender. How does the collection happen? So those are the nitty-gritties which are legally, detailed while we do a agreement with the bank or NBFC, and that is followed. So everything is that is being done today is absolutely as per the law of the land and in line with RBI guidelines. So we cannot move out of RBI guidelines simply because either I am a listed rated organization, or the bank at least is a regulated organization. So it's always within the frame of law.
Sure. Avinash, your opinion.
Yeah, thank you. So again, compliance, NBFC, I think again, the hall is full of NBFC. I was reading one article which says that if one NBFC is operating in one state, they will have to follow more than 600 compliance. And this year we are talking about co-lending. So co-lending, we normally call it, it's a marriage between a South Indian guy and a North Indian female. So it adds on to the story whereby now you are an NBFC, but you are collaborating with the bank, and bank is tightly coupled with RBI's norms and all, and hence you are also have to adhere to whatever the compliance that bank wants you to do that. So it is adding to the soup. As per again our experience, manually it is becoming difficult to adhere to this. Having a system, I think, in place will be a solution. There are many compliance that can easily be taken care through the system. So for an example, you need to have a proper identification of the partner. So you have to identify a proper banking partner or proper NBFC partner, right? Which should follow as per the policies. Secondly, adhere to the signed CLPs, that is co-lending policies, whether the underwriting is being done accordingly or not. So all those things can be achieved through the system. Due diligence. Now, due diligence plays a very important role. Having a system will ease your work if you're thoroughly want to do the due diligence. It also says that underwriting cannot be outsourced. So all those things can be achieved through a system having in place. Then you are having categorization and classification of the asset. So all those things are possible. Escrow management, all those things are possible through the platform. And this is what we have seen, that by the time people are understanding more about co-lending and all, they are also understanding that manually doing co-lending is not the solution. If we want to scale up the business, platform is the solution. And with the platform, with the proper platform in place, the compliance can easily be achieved.
Thank you.
Thank you, Avinash. Last question of this panel, and before I get into it, any burning questions or inputs from the audience? Anyone wishes to ask or comment something? So please identify yourself, give your name, organization name. Shruti, give them a mic. I think you can speak anyway. Let's not.
My question is regarding the co-lending CLM model 2 here. So let's say post your origination cycle, you realize that your majority partner, which is the bank, they have the same person already registered with them as an applicant or a holder of a loan or any deposit. Then in this situation, it is very, very tricky for the originator, especially the minority partner. So how to tackle such situations in real life, and any insight on this, whether any new clarifications will come?
So I'll tell you what, when you happen to do co-origination, which is CLM2, is what you're saying. First, a policy overall has to be agreed between both the originating partner as well as the other partner, be it a bank or an NBFC. Now, while you are framing that policy, you need to envisage these kind of situations, and that's what we do. So if let's say normal arrangement is that between two partners we will not go beyond, let's say, a 3 crore or 5 crore, whatever it is. You can always say that if you as a bank have an exposure, whether you would exclude that exposure from this 5 crore, or including that exposure, it should not cross 7 crore, 10 crore. So those are arrangements and grades which can be agreed at the time of policy formation only. So normally what happens is, I completely agree with you. Yes, there are instances which happen that this customer is already lying with my co-lending partner. So his internal review would say, I already have an unsecured exposure of 50 lakhs or 25 lakhs. You have come up with additional. But those are things which should be envisaged while the policy is being formulated and agreed between both. So agreement could be on either side, but then at least you have clarity. Thank you.
Yeah. Thank you. Any other questions? No one. So I will move on the next question. That how is the role of data analytics, artificial intelligence, machine learning? These tools have emerged in a big way, and in this sector of co-lending, how important are these, and how they can be used? Karun, you can start with this.
So I think we're talking about like now two partners coming together to service a particular requirement of a customer. Fundamentally, like if you look at AI or machine learning, it is basically improving our ability to make a decision, right? So if you are like there could be like a technology delta between the two partners. So if one of them, say for example, has a better model versus the other, it will help to improve the decision making. So it'll be better able to predict risk. You'll be able to probably shorten the time period for taking that decision if you're using those models. The other aspect of it is that the AI models basically are dependent on how they are trained, right? So if you have more data and if you're lending to more, if you have data about more customers, your models can be further, that much more better, right? So in today's date, like AI and ML are like kind of, they're very, very intrinsic to the whole lending business. So therefore, I see that in this space as well, they will be.
Great. Vaibhav, over to you.
Right. So AI ML, I would say not specifically to co-lending, but overall in the lending space itself has a very important role to play. So when you start, you obviously start with a judgmental model in terms of credit policy, that what weightage, etc. you want to give to which criteria when you start lending to a segment, right? And I mean, earlier there used to be regular policy reviews on a quarterly basis and all, where people would do that exercise of seeing how the portfolio is performing, what went wrong in loans which have gone bad, what can we do in changing the weights, etc., to our models. So obviously, you're doing that exercise. This was a big exercise being taken by multiple people and had its limitation of being done at a regular frequency, right? Because it's a big effort. Now you have kind of removed that effort if you have a AI/ML model which is evolving or self-learning based on data that your system is generating. So once you have that kind of model, it becomes, I mean, the correction process becomes that much faster. And as you gather more data, you can, because you are doing that exercise automatically, you can have that much more variables being analyzed rather than being limited to 4 or 5 parameters. And sometimes, I mean, there can be very, I mean, there can be very revealing kind of results that may come out that judgmentally or, I mean, logically something that you are not giving weight to may have a very important role in determining a particular segment, how it performs in terms of repayment, whether it is a seasonality impact on the repayment and all those kind of aspects. So instead of kind of first suffering from that outcome and then taking a decision, if you have an AI/ML model, you'd be able to take that call quickly and take the corrective action quickly rather than suffer from that. And like he said that there are, I mean, if you have more data available, you would be able to do that exercise in a much better way because you have that much more points. I mean, that much more decisions which are being fed to your score engine. So with co-lending, one thing that can probably help is smaller NBFCs. When they work with larger NBFCs or bank, that they would have that much more data flowing into their system and improving it that quickly.
Fantastic, Vaibhav. Thank you. And requesting Avinash Jha to respond, please.
I agree. I totally agree with Vaibhav. Very well said. I'll again would like to connect this to co-lending. In co-lending, what happens that from the bank perspective, just see that they're not touching the customer. It is the NBFCs. So it is the data which give information to the bank about what the borrower is, and hence data is going to play a vital role over here. And and then you need to have all the possible sources of data wherever it is possible, which Vaibhav already covered through AI/ML, through whatever means, probably a surrogate channel. But then data is going to be an important role. Uh, or the platform also, platform should be able to capable to actually process those informations and data. So the information can be, again, if the bank wants to do the scrutiny. So this brings me to a recent article that I have read about RBI talking about a runaway growth in the co-lending numbers from 5,000 crore to 25,000 crore in last 1 year, and that brings on to more scrutiny into the processes. And there they are talking about whether banks are properly doing underwriting or not. So there were again processing of the data. So the system should be there which support the bank to actually do the processes correctly. If bank wants to dig down to see whether the bank statement is being properly read, probably data from MCA has been pulled, probably all the ratios is being calculated correctly or not. So all those things, if bank wants to do, the system should be able to support these banks. And I think that is going to make a stronger system that will have more trust by RBI, by the banker, and also by the NBFCs. And that will make a complete system which has no loophole, but it is going to be a very strong process. So I think data is an ultimate thing which is going to be the driving factor of the entire co-lending system. Thank you.
Fantastic, Avinash. Over to you.
Yeah, thanks. So of course, data to understand why data requirement is so humongous today, we need to understand the conventional process. What happened earlier was some paper used to reach to the appraiser, the underwriter. He kind of goes through that data, culls out whatever is necessary as per him, and then go back to the policy, check whether XYZ is acceptable or not, and then the decision outcome. In this entire process, I think the decision making is called artificial intelligence that we are trying to do, automate the system. Now, A plus B whole square is something which everybody knows, right? A square plus B square plus 2AB. But how fast can you process it? That is where AI comes in. So AI is built because we have a history of at least 50 years of micro lending in India, some millions and trillions of accounts. You already have the formulas done. The only thing that is required is data now. It's as simple as that. Thank you.
Great. Any questions or feedback from the audience? Anyone? None? So I think, yeah, okay. Please stand up and identify yourself. And do you have a mic, Shruti?
Hi, I'm Shubhankar Chakraborty from Calcutta. I'm a private wealth manager by profession. So I have this question to all the panelists now. OCEN has been doing something similar. I mean, government has been doing it through this open credit enabled network. How do you think this can help this to bridge this gap of the delay that we are talking about, or can it at all help?
Yeah, yeah.
So government has been, there's been a government initiative of OCEN, OCEN, Open Credit Enabled Network. So do you think that can help the process of this gap that we are talking in co-lending?
Open credit network is talking. You want to respond?
Yeah, so OCEN is a government initiative. I think it's got more to do with bringing transparency in terms of, an individual who needs credit and transparency around the data about that individual. So it's a little different topic as compared to like co-lending. So it's even on the OCEN rails, like, you could do co-lending on those on the OCEN rails.
That's what I was talking about.
Basically, what OCEN really talks about is that there needs to be consent from the individual, and the data should be available. The financial institutions can make that data available. Like there is another aspect to which is already there, which is like account aggregators, which are coming up. So that initiative is also in the same lines as to make the data more available, right? So as the data becomes more available, it becomes easier to make decisions. And since it's kind of like democratized in the sense that it's available to anyone, so that will overall make the credit decisioning much better. And
So
I think
does
it'll
it
help
help
both the
this-
partners as far as co-lending is concerned.
So do you think that will help this co-lending even going forward, or is it not?
Yeah, it'll
significant
help.
at all?
It'll help lending as such overall a whole lot. So like
Okay.
co-lending, of course, it'll help. Co-lending is a kind of like a subset of the overall lending, right?
Thank you.
So any such initiative, right, which helps in bringing transparency is going to help the overall lending space. So I mean, the real challenge that when, for example, when you get a scanned image or a bank statement is whether that data or document is authentic or not. So any such initiative which brings in authenticity of the information being shared is going to help overall lending space and will automatically help co-lending as well.
Thank you.
Sure. Any other question or feedback? None? So we will have the closing remarks from each of the speakers. So I will start from Vaibhav. Over to you.
So yeah, like we have been discussing, that co-lending has seen phenomenal growth in last 1 year itself. I mean, the actual vision was that it should help the reaching out to the end customer and increase credit availability. And what I'm seeing more is, apart from just being a bank or a large NBFC participating, it's more smaller NBFCs and two NBFCs also kind of doing this kind of participation and making the credits available to the last mile person, and it's going to grow at a rapid pace.
Yeah, thank you for being a lovely audience, and thanks to our ELTS for giving us this opportunity. So I think, like we've discussed today, overall co-lending is something which has been there, but now it's getting more structured. We're getting to see, some specific regulations around it, and it is going to be like a key growth lever for smaller NBFCs and even for the larger partners to expand their base.
Yeah, thank you for giving us this opportunity to be heard and share the information. I feel that more and more support from the regulator, from government, and from our elder brothers, the banks, especially the PSU banks. If this kind of a support keeps happening, I am 100% sure that this 25,000 crore, which was the reason of worry from RBI last year, yesterday, will go up to maybe a 2,50,000 or a 25,00,000 crore very soon. And then over a period of time, I think 1 year or 2 year, when we have a proven track record, which we already have to an extent, but yes, 2-3 years will make it far more stronger. And that is when, the large PSU banks as well as RBI will start believing on the overall model, and it will remain sustainable. Thank you.
Yeah, thank you, everyone. Last mark would be, I see it from the point of view that it's a win-win-win for everyone. So bank reaching out to the unserved, probably, masses, NBFC able to leverage to their balance sheets, and borrowers are getting a cheaper rate of interest. Now, what else we want? So it's a win-win-win for everyone. And with the collaborative effort, we can make this thing happen. Thank you so much.
Fantastic. And I can see some of the audience doing a video recording of the summit, and the recording of the panel. So it means you are liking it. So if you have liked this panel, raise your hand, please. और जिनको ये पैनल और बहुत ज्यादा अच्छा लगा, कृपया दोनों हाथ उठाएं. थैंक यू. और मुझे लग रहा है कि जो लोग राइट में बैठे उनको बिल्कुल अच्छा नहीं लगा. सो दे आर ऑल लाइक साइलेंट. सो हो सकता है आपको अगला सेशन ज्यादा अच्छा लगेगा. सो वेट फॉर इट. सो just to inform you कि all the sessions are getting video recorded, and ये हमारी magazine है जो banking and finance. So you can go on social media and write Elets banking and finance on LinkedIn, Instagram, Twitter, Facebook, and we will be editing these videos of each of the sessions, and some of the important parts of the sessions will be on these social channels. So you can like and share, so that the knowledge which we are generating here is like goes and gets disseminated to a larger audience. So with this, I thank all the panelists here. You have been a great speakers. I have really learned a lot in last half an hour. So thank you so much for this. Thank you.